The global trade landscape has been dramatically reshaped with President Trump's recent announcement of sweeping tariffs on goods from Canada, Mexico and China. These tariffs, set at 25% for Canada and Mexico and 10% for China, represent a significant escalation in protectionist trade policies. This move has sent shockwaves through international markets and sparked fears of a global trade war. These tariffs mark a departure from decades of trade liberalization and signal a shift towards a more protectionist global trade order. This essay will delve into the reasons behind these tariffs, their potential economic consequences, and the broader implications for international trade relations. The immediate impact of these tariffs has been significant, with stock markets around the world reacting negatively to the news. The Dow Jones Industrial Average fell by 0.7%, while the S&P 500 and Nasdaq also experienced declines. This reaction reflects the uncertainty and anxiety surrounding the potential consequences of a trade war. The imposition of these tariffs raises critical questions about the future of global trade and the potential for cooperation among nations in an increasingly interconnected world. The Trump administration has cited several reasons for imposing these tariffs, with a primary focus on combating the flow of illegal fentanyl into the United States. Fentanyl, a powerful synthetic opioid, has been linked to a surge in overdose deaths across the country, and the administration argues that these tariffs are necessary to pressure Canada, Mexico, and China to take more aggressive action against fentanyl trafficking. Beyond the issue of fentanyl, the administration has also pointed to broader economic goals, such as reducing the trade deficit, protecting American jobs, and reviving domestic industries. There is a belief that these tariffs will incentivize companies to relocate manufacturing back to the United States, thereby boosting the American economy. However, critics argue that these tariffs are more likely to harm American consumers and businesses than they are to achieve their intended goals. They contend that the tariffs will lead to higher prices for consumers, reduced access to goods and services, and job losses in industries that rely on imports. Furthermore, they argue that the tariffs are unlikely to address the root causes of the trade deficit, which are complex and multifaceted. The immediate impact of the tariffs has been felt most acutely in the financial markets, where investors have reacted with a mix of uncertainty and apprehension. Stock markets around the world have experienced declines, reflecting concerns about the potential for a trade war and its impact on global economic growth. The tariffs have also injected volatility into currency markets, with the value of the US dollar fluctuating against major currencies. This volatility creates uncertainty for businesses engaged in international trade, making it more difficult to plan and execute transactions. Beyond the financial markets, the tariffs have also created uncertainty for businesses that rely on imports from Canada, Mexico, and China. These businesses are now facing higher costs for raw materials, components, and finished goods, which could lead to price increases for consumers or reduced profit margins for businesses. The tariffs have also disrupted supply chains, as businesses scramble to find alternative sources for the goods they need. This disruption has the potential to slow economic growth and lead to job losses. While the Trump administration argues that these tariffs are necessary to protect American jobs and industries, many economists warn that they will ultimately harm American consumers. The tariffs are essentially a tax on imported goods, and this tax will be passed on to consumers in the form of higher prices. The tariffs are expected to increase the cost of a wide range of consumer goods, including automobiles, electronics, clothing, and food. This increase in prices will disproportionately impact lower-income households, who spend a larger percentage of their income on consumer goods. In addition to higher prices, the tariffs are also likely to reduce consumer choice. As the cost of imported goods rises, American consumers will have fewer options available to them, and they may be forced to purchase lower quality or more expensive domestic alternatives. This reduction in choice will limit consumer freedom and could stifle innovation. Section 5. Retaliation and Escalation, a dangerous game of tit for tat. The imposition of these tariffs has not gone unanswered by Canada, Mexico, and China. All three countries have vowed to retaliate with tariffs of their own, targeting American goods and industries. Canada has proposed tariffs on U.S. goods, such as Tesla vehicles and alcohol, while Mexico has indicated that it will target agricultural products and manufactured goods. China has pledged to firmly defend its interests. and has already imposed retaliatory tariffs on a range of U.S. products, including soybeans, automobiles, and pork. This tit-for-tat exchange of tariffs has raised fears of a trade war, which could have devastating consequences for the global economy. A trade war would disrupt global supply chains, increase costs for businesses and consumers, and slow economic growth around the world. The potential for escalation is high, as each country feels compelled to respond to the other's actions. This dangerous game of brinkmanship could spiral out of control, leading to a prolonged period of economic uncertainty and instability. Section 6. The global trade ecosystem teetering on the brink. The imposition of these tariffs and the threat of a trade war come at a time when the global trade ecosystem is already facing significant challenges. The COVID-19 pandemic has disrupted supply chains, increased transportation costs, and led to shortages of critical goods. The war in Ukraine has further exacerbated these challenges, contributing to rising energy prices, food insecurity, and geopolitical instability. The tariffs imposed by the United States and the retaliatory measures taken by other countries threaten to further destabilize the global trading system. These actions undermine the rules-based order that has governed international trade for decades and create uncertainty for businesses and investors. A breakdown in the global trading system would have far-reaching consequences, reducing economic growth, increasing poverty, and potentially leading to conflict. Section 7. The specter of inflation, a looming threat to economic stability. One of the most significant concerns about the potential impact of these tariffs is their potential to exacerbate inflation. Inflation, a general increase in the prices of goods and services, is already a major concern for policymakers around the world. The COVID-19 pandemic, supply chain disruptions, and the war in Ukraine have all contributed to rising inflation rates, eroding consumer purchasing power and slowing economic growth. The tariffs imposed by the United States and the retaliatory measures taken by other countries will likely further fuel inflation. By increasing the cost of imported goods, these tariffs will put upward pressure on prices, leading to a decline in the purchasing power of consumers. This decline in purchasing power could lead to a decrease in consumer spending, which could further slow economic growth. Section 8. Historical parallels and lessons unlearned. A look back at past trade wars. The current trade tensions between the United States and its trading partners are not without historical precedent. Throughout history, there have been numerous examples of trade wars, often with devastating consequences. One of the most well-known examples is the Smoot-Hawley Tariff Act of 1930, which raised tariffs on over 20,000 imported goods. The Smoot-Hawley Tariff Act is widely blamed for exacerbating the Great Depression, as it led to a collapse in global trade and a deepening of the economic crisis. Despite the historical lessons of past trade wars, it seems that some policymakers have failed to learn from these mistakes. The current trade tensions between the United States and its trading partners bear a striking resemblance to the protectionist policies of the past. If these tensions are not resolved through diplomacy and cooperation, the world could be headed for another period of economic turmoil. Navigating the uncertain future of global trade. The imposition of these tariffs represents a significant shift in U.S. trade policy and has far-reaching implications for the global economy. While the Trump administration argues that these tariffs are necessary to protect American jobs and industries, many economists warn that they will ultimately harm American consumers and businesses. The tariffs have already led to threats of trade retaliation from Canada, Mexico, and China, in the form of tariffs, raising fears of a trade war that could have devastating consequences for the global economy. The future of global trade remains uncertain. The current trade tensions highlight the need for greater cooperation and dialogue among nations. The world is interconnected, and economic prosperity depends on a stable and predictable global trading system. It is essential for policymakers to work together to resolve these trade disputes, and to create a more open, fair, and rules-based trading system that benefits all countries. Please like and subscribe to the channel.